Good afternoon, everyone, and welcome to another edition of Your Daily 5, presented by StockCharts TV. My name is Grayson Roze. I'm the Vice President of Operations here at StockCharts.com. So good to be with you. One of my favorite shows, as I always like to say, every time I have an opportunity to host one of my favorite shows that we have here on StockCharts TV with a different perspective every day. I always love to tune into what the different analysts have said on the latest episode of Your Daily 5 at the end of the day, part of my little routine. So always fun when I get to host you and share some of the top charts that I'm looking at to run through the current market. We got some great stuff here today, a pretty fascinating market, a lot of rotation under the surface, but we have been chopping around quite a bit, a little bit range bound, so many different things happening though, as we've come out of the craziness of last year, and we have a market here that's trying to sort of settle into its future. So we got a lot of good stuff to look at today, sort of sharing my screen, showing you some of the charts that I am keeping a close eye on. So let's get right to it. First up, what I wanted to look at was a chart that I actually see every day, part of my daily routine. This is one of the charts that I look at every day. We're looking at a 6-month 60-minute chart here of the S&P 500. Now, the point that's key here is that we have a market that broadly is going higher, but around that sort of above the 4,000 level here, we've hit a bit of a range-bound consolidation period for the last couple of months. We've really been chopping around just above that 4,000 level. Sort of 40.70 has been kind of the crucial line in the sand that I'm drawing there as the bottom purple line. And then about 42.20 is that top line. Those are sort of the two levels that we've been bouncing around between. We've made a couple of sort of false starts above that there. You can see kind of at the start of May, tried to jump above it. But for the most part, what we've seen is a market that has taken a bit of a breather. When we look at just the S&P 500 itself, we've got a market that's taken a bit of a breather here for the last couple of months. Now, obviously, coming out of the March lows from last year and the incredible run higher that we've had, this isn't a concern to me, but it does showcase that we've got a little bit of hesitancy in the market, just kind of chopping around between these two ranges. I know this is your daily 5, but I'm going to cheat. I got 6 charts here. But the next one is really just kind of a zoomed in look at what we're seeing here. So we can actually zoom in a little bit more. This is, again, another chart that I look at every day. Now what we're looking at, same chart, but we're looking at a 3-month, 30-minute view of that. So we can really start to see that range-bound consolidation period that we've seen really since the start of April, and how closely we've bounced off those same levels. Again, sort of 40.70 is the level that I'm looking at on the bottom of this chart, that lower purple line. And then about 42.20 is that top level. So continuing to chop around, for the market overall to really get going again here, we need to get up and out of this range. So I'm hoping that we can. We might need another test at the bottom of it though, but clearly a pretty defined range here on the S&P 500 that we've been watching. If we do break above that 42.20 level, I would expect to see another test of it, hopefully from the top. But those are some of the levels that I'm keeping an eye on the S&P 500 as we continue to chop around a little bit. Now, another chart that I look at every day, though, that I wanted to zoom out and sort of step back to, we've kind of looked at this intraday view here on the S&P 500, but let's step back to a little bit broader view. This is a 1-year chart. And now instead of looking at a sort of a more condensed index like the S&P 500, which is, of course, just large cap stocks, let's look at VTI. This is the Vanguard Total Index. Any of you who follow me, any of you who have heard me on this show or any other presentations know that I am a big fan of VTI as a benchmark. The total index, still a cap-weighted index, so still heavily favoring the large cap names. But to bring in a little bit more of a broader view, I like to use VTI as my benchmark. So when we think about the market overall, the point of this chart, I call this my moving average focus chart. You can see that what I've done is I've actually turned the opacity all the way down, almost all the way down on the price bars themselves, on the candlesticks there. What we're left with is just a pure focus on 2 key moving averages for VTI. We've got the 50-day in red, and we've got the 200-day in green. I also have the 100-day there faded out a little bit as the dashed orange line. But I look at this chart every day, every week, and it's always a great reminder to just look at the general direction of the market. We get so focused on the price bars, the individual price action, which is crucial. That's why I still have it on this chart. But when we step back and look at what these key moving averages are doing, they are trending higher in a beautifully steady move. So think about that. Think about how to sort of step back from the noise, filter that out a little bit. That's what I love this chart style for. I actually use this in my own portfolio as well to look at some of my positions. I've got a saved chart style that I call MA Focus, and I'll actually pull that up for all of my different positions, other indexes as well, other ETFs. But always a great way to look at what you own and sort of stay focused on the slightly longer term trend, the intermediate term trend there, with the 50 and the little bit longer term trend with the 200. But when I think about VTI, when I think about the general direction of the market, sort of the true direction of the market, that's what this chart helps me focus on. And when we see that here with the 50 steadily trending higher, sitting above the 200 nicely, also sitting above the 100-day, we've got all three of those just steadily trending higher. We can also see that in those faded out price bars, we've really just kind of been bouncing along the 50-day in the last couple of months. We had a couple of bounces at the tail end of last year off the 100-day, but we've really been bouncing along these steadily trending moving averages. So this chart is intended to keep me focused on sort of the true direction of the market, which in this case remains up. Now, let's zoom into a couple of different metrics that I'm watching. Some of the key things that I'm taking a close look at, some of the key things that I'm keeping a close eye on. In the top panel, we have the Nasdaq. Obviously, the underperformance of the Nasdaq this year has been a big story. Again, we've seen the Nasdaq really chop around in 2021, just drifting sideways, underperforming a lot of the other major indexes, especially something like VTI, heavily underperforming the S&P 500 as well. But when I look at sort of where we're going on the Nasdaq, I see us in this pretty broad rising wedge pattern. So you can see that that dashed line at the bottom, the purple line, sort of the support line there, the trend line of the Nasdaq, steadily trending higher. We have been bouncing off that quite a bit. And we've made two moves at sort of the exact same level there. You can see us bouncing off the top purple line. So I'm watching the Nasdaq sitting right now actually above its 50-day. I'm watching the Nasdaq move in this sort of rising wedge pattern. If we can get up and out of that, that is going to be a very strong sign for the Nasdaq itself, but also for the return to growth narrative that we've been hearing a little bit about. So in the lower two panels of this chart, we have actually the Russell 1000 growth versus the Russell 1000 value. We can look at growth versus value. A lot of people have been talking about the strength of value. But when I zoom out, this is a 2-year chart. When I zoom out and think about the sort of the growth versus value narrative that a lot of people have been talking about, I think what a lot of people are missing is that in 2020, the outperformance of growth was so incredible, so remarkable, so unprecedented in a lot of ways, that this return to, or sort of resetting of that ratio, the shift back towards value, is really less of a structural change in the market to me, and more of just kind of a healthy reset for this ratio. That growth versus value ratio was doing something in 2020 that it really shouldn't have. It got so far ahead of its skis. You can see it there, just so aggressively climbing in 2020 that this reset really makes a lot of sense to me. And when we look at where that growth versus value ratio is actually pulled back to, it makes a lot of sense. So I think this is much more of a healthy reset for growth rather than a sort of a longer term shift away from growth. So I'm keeping a close eye on that ratio. Also keeping a close eye on the ratio at the bottom, which is offense versus defense. Again, kind of a similar story. We had such a favoring of offense. That's consumer discretionary versus consumer staples, and actually in the equal weight flavor there in the green line. But again, kind of a healthy reset for that ratio as we've chopped around a little bit in 2021. So I'm keeping a close eye on all three of these, and I like to kind of stack them. Actually, I love the stack on this chart, having all three right next to each other. Now, something else that I'm watching closely is the equity-only put-call ratio, staying firmly in the complacent zone, what we like to call the complacent zone, sort of below 0.55. This is an interesting chart, though, because what we have basically is traders up at the top The equity only put call ratio representing how traders are positioning themselves. Are they favoring puts versus favoring calls? Obviously, if they're favoring calls in the market, that means that traders are a lot more bullish. Below that, we have active managers. That's the NAAIM exposure index. And what we can see is that survey of active managers and their exposure to the market really pulled back actually a couple of weeks ago. Sort of in May, we were quite low on that ratio actually. Below 50% of active managers were long on the market. Now we've actually seen that ratio take a nice jump forward up to about 68%. So I'm looking at this chart. This is another one that I look at on a daily basis and a weekly basis as well. I'm looking at traders positioned on the long side there, favoring calls, and I'm also looking at active managers coming back in a little bit, getting a little bit more long in their exposure. So a nice stack here. Again, I like to stack these things in sharp charts and on stock charts. Always nice to stack all these different indicators and things on top of each other with our charts. But those are two things that I am keeping an eye on in this market. Now, to wrap up the show, I always love to close out with this. I put a list out every Sunday, or in a funny short week like this. It came out on Monday, but if you follow me on Twitter at Grayson Roze, I put out a 10 I'm stalking list every Sunday, just 10 names that are setting up nicely, 10 names that caught my eye as I'm going through my weekend review. This is this week's list, but if you follow me on Twitter, you can get that list every weekend. One name that really stands out to me right now, NVIDIA. I love what I'm seeing on the chart of NVIDIA. A long uptrend into a long consolidation period. We saw about a year of consolidation here in NVIDIA. Tested the 200 a couple times. Really was kind of underperforming the market. Broadly outperforming, but in this consolidation range, underperforming the market, but taking a breather after a big run and just starting to break out of that now. Strong reports from NVIDIA too, a business that just keeps flying off the shelves. Relative strength picking up. We've got accumulation distribution favoring accumulation, showing some signs of accumulation there, which I love to see. And we have the scooter now getting back above that 75 level that I watch, which is key. So a beautiful breakout here on NVIDIA after a long consolidation period. Definitely a strong name to watch right now, especially with that relative strength picking up. That's beautiful to see. Now, if you're interested in following any of my work, of course, follow me on Twitter at Grayson Roze. Probably one of the most fun ways to follow me. I'm always putting out fun charts and things that I'm keeping an eye on. But you can also find me at stockmarketmastery.com. That's my personal website, my educational website, where I do a lot of teaching and educational work for investors. You can also find either of my books in the StockCharts store or on Amazon. Tensile Trading, the 10 Essential Stages of Stock Market Mastery, really a sort of a complete picture of my approach to investing. Also, Trading for Dummies. I wrote the latest edition of Trading for Dummies. You can find that if you want sort of a total intro to getting into trading and charting and technical analysis and all of that fun stuff. So lots of ways to follow me. But if you are on Twitter, that's one of my favorites. I love to connect with people on Twitter and share charts back and forth. Charts are meant to be shared, so we can do that on Twitter, on social media. It's so great for that. So anyways, I want to thank you for joining me. I do want to also mention my show, Stock Charts in Focus, every Friday, 3:30 p.m. Eastern Time on Stock Charts. Join me on Fridays. It's really more of a product focused show, sort of a deep dive into the site, into everything Stock Charts. But if you are a Stock Charts user, my show on Fridays on Stock Charts TV will definitely help you get more value out of the site. Maximize your membership, maximize the tools, tips, tricks, shortcuts, all my favorite stuff, always shared there every Friday on Stock Charts in Focus. So join me for that on Fridays on Stock Charts TV. Thank you again for joining me on today's edition of Your Daily 5. I'm sure I'll be back soon, but it's been a blast to be with you. Until the next time, chart on, my friends.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.